I'm in conversation with Rajan, Chairman of Bain India. Mr. Rajan, thank you so much indeed for joining us today on BloombergQuint. Let me begin this conversation by asking you about what you thought about your assessment of growth. The narrative seems to have suddenly changed given the macroeconomic indicators that have turned a wee bit negative.
Yes.
What do you make of it?
So, it is a concern, obviously, when you see the numbers. We've had 5 straight quarters of declining growth. What I would say is that, the last few quarters, one has to look at it, I'm hoping, as an aberration because of demonetization and also because of GST implementation. My sense is that this quarter, Q3, will actually be an important marker in terms of understanding as to whether we are on the growth path or not. And in specifically, this festival season, what really happens with consumption, I think, is going to be very important for us to really figure out what's happening with the economy. I think to look at what's happened in the last few quarters, I don't think will give us a true sense of the latent demand or the underlying strength of the economy. So let's see, I would say. I'm hopeful. I'm hopeful that the structural changes, especially with GST, more so than with demonetization, but especially with GST, will actually be a game changer in the long run for the benefit of the economy.
Let's talk about investor sentiment. 2 years ago, we saw a significant amount of private equity money coming into India.
That's right.
Has that sustained, or do you see that waning? I ask you in the context of FII money moving out of the markets for the last 2 months at least.
Yes. Now, there is private equity money that's still coming in. So, in fact, this year, we are on track to either have the best inflows into India from a private equity perspective, maybe the best year or the second best year, but very close. There's still a lot of money that's coming in from the private equity angle. There's obviously a lot of FDI as well, as you know, significant increase in FDI. On the FII, I agree with you. There's a little bit of volatility that we're seeing as far as FII is concerned. But both the private equity inflows and the FDI inflows are actually, I would say, what's keeping us from continuing to maintain the current account deficit that we have. And that's positive for us. So we'll see, but actually it's not a bad story from the private equity side at all.
I want to talk about bad loans as well. You've seen the insolvency process kick off.
Yes.
You have seen, many people come to the table. But ultimately, it has to result into a sale. Do you see that resolution taking place?
I completely agree with you. Right now, the problem is that it seems like a complicated process. And to the point that you're making, which is very important, that at the end of the process, there needs to be a resolution where the lenders can see money coming back and there's a resolution to the process. I think it's only when we see that happening in a few cases, in a few major cases, will there be confidence in the new process and the new system. It's early days yet. I think the jury is still out.
You also see, talking at a time, Mr. Rajan, where the primary markets have seen considerable activity. We've had by far the best IPO market in several years. Have the guys of the private equity players who've stayed the course, are they paying rich dividends? Does this confidence in the waiting?
Yes, I think it proves that if you wait long enough, that the tide might come back, and that you'll float with the rising tide. I think for a lot of private equity investors who made investments during the 2006 to 2008, 2009 timeframe, where people suspected that they paid very high valuations for those assets, and people were wondering as to whether they would actually make money. For people who have stayed that course, I think this has been a great opportunity. And I'll say this not just from an IPO perspective, but also in terms of secondary sales.
So is the volume of secondary sales equally active?
Yes, it is. So what is happening is there are a lot of private equity firms, the assets that they're holding, they're looking not just at the IPO markets, but they're also looking at secondary sales as a means to exit.
A larger question about, you obviously talk to a lot of corporates, and since you have a finger on the pulse of what's going on, investments. That's an area of concern that the government has expressed concern, saying that, look, private industry is not spending at all. How and when do you see that returning?
I'll be honest with you. I have been proven wrong in terms of calling this. I expected that by now the private sector investment cycle would have started. But obviously demonetization happened. A lot got taken out of the economy. My personal sense is it's at least a year away. And the reason is that when you look at capacity utilization on an average, now this varies by sector. So, for example, automotive is doing much better than other sectors. But on an average, capacity utilization is between 70 to 73, 74%. Till it reaches 85%, you're not going to see people put money into the ground in terms of investments. My sense is that if we have a good festival season, people have confidence that we're on a growth path, and we're on track to get to 85% capacity utilization, then I think we'll start seeing more private sector investments going into the ground.
Okay. I have one final question. We've seen a disruptive event after demon in GST.
Yes.
When you talk to businesses,
yes.
what's the operational challenge they're facing in the transition period?
Yeah. So it's actually mixed, to be very honest with you. So when I spoke to a logistics firm, for example, they just love it. I mean, it's been a phenomenally positive experience for them, yes. In the sense that, they're seeing sort of transit times come down for logistics, they're seeing costs come down and so on. For a lot of other companies, especially the services space, it's just become very complicated. The one thing I want to remind people is that this is going to take some time to stabilize. Somebody told me about the example of when VAT was implemented in the UK. It took many years, even in a country like that, for the system to stabilize. So I think we're going to take some time for it to stabilize. I think the one thing that comes to mind is that the government is doing a lot to proactively help people in terms of resolving the GST issues. I think they can be a little more lenient in terms of compliance. And what I mean by that is I don't mean compliance from the point of view of not paying the GST money, but if, for example, you have to pay in the money in July, if you don't pay it in July, if you take a month or two, by the end of the year, which might be December or March, as long as you do it, I think that should be fine. Let people take the time to get used to the system, but I think it's a great way to formalize the economy. I think it's necessary. It is going to be a game changer, I feel, but the implementation, I'll be very honest with you right now, is mixed.
Mr. Rajan, thank you so much for your time.
Thank you. Thank you.